It's also an interesting point in time. I'm actually expecting a faster slowdown, and actually, I think rates back off. But either way, we're kind of record oversold versus every metric for the space. Even simple stuff like RSIs are the lowest they've ever been. On-chain metrics, everything. So either way, it feels like the risk reward in crypto at these levels is really bloody good. So let's say it hasn't bottomed. Maybe I'm wrong. I think it's bottomed, but let's say it hasn't. Let's say it goes down another 30%, 40%, 50%. Let's say use 50% for easy maths, because that's the kind of moves crypto does when it feels like it. The upside is 10x from here, at least.
Triggered by August's hotter than expected inflation report, the crypto market sell-off continues into its third day. As of press time, Bitcoin, the world's largest cryptocurrency, is once again trading below $20,000. After losing more than 9% of its price on Tuesday, the king crypto asset has declined further to $19,700. This is its lowest price since September 9. Despite the successful completion of the Ether merge, the network's Layer 1 native token has also lost over 6% of its price within the day. It is now trading at $1,470, its lowest price since August 30. While the recent market decline is a red flag to some market investors and analysts, others are certain that the crypto market is still on track and remains one of the best investment opportunities. In a recent broadcast, two of those market giants, Real Vision's Raoul and Dan Morehead, extensively discussed the industry's bear market performance and what investors can expect going forward. Dan Morehead is the founder and CEO of Pantera Capital, an investment firm focused exclusively on cryptocurrencies and companies utilizing blockchain technology. Combined, both have over 50 years of global macro experience, which they put to good use in their broadcast. We will now take you to Powell and Morehead's interview. Please watch the video to the end, hit the like button, and subscribe to the channel for more videos like this. Also, ensure you drop your comments and observations in the comments section below. Thanks and enjoy the video.
But let's talk crypto as well now. So how does this macro framework, which sounds like either inflationary or a certain amount of monetary tightness that we're not used to, how does that work in the crypto market? How does that flow through?
Yeah, so when the Fed and the Congress started printing just, insane amounts of money, I will admit I had my pom-poms and I was like, this is awesome for Bitcoin. You got to own Bitcoin. And, Bitcoin's at 3,000 or whatever at the time, to 60,000. So huge fan of that story. So some people say, well, it's totally counterintuitive. If they're going the other way now, that's going to be horrible for crypto. And I really, although admittedly I was hugely positive on Bitcoin because they were printing tons of money, they've already printed all that money. It's out there, right? There's 9 trillion of bonds that have been printed and out there. And that money's not going away, probably, right? Like, I don't think they're going to sell all those bonds and take all that money out of the system. I actually think they should, but I just don't think they will. So all the money's already out there. So it will still keep sloshing around and generating inflation. And there's this huge debate right now, is Bitcoin really a good inflation hedge or not? We don't know because we haven't had inflation for 15 years, right? We're going to find out. I actually think we're going to find out it is a great inflation hedge, that when people are worried about the currency being debased 10% a year, they'll start looking for alternatives. And that used to be countries like Argentina or Venezuela or whatever. Now it's going to be American citizens. It's going to be British citizens. It's going to be Europeans. All are going to be looking for ways to get protected on the debasement of their currency. And although recently crypto has been highly correlated with risk assets like the S&P, I'm betting that it's going to break down, that there are going to be more people going, if rates do keep rising for the next 2 or 3 years, I don't want to own bonds, definitely. Probably don't want to own stocks,
We are excited to be working with Omaze to offer you the chance to win an eco-friendly Tesla Model X Plaid and support a great cause, Reverb, a nonprofit environmental organization actively promoting environmental sustainability through music. Go to www.omaze.com/savvy to enter for your chance to win this one and a lifetime prize while helping to make the world a better place. Submit your entries through the link in the description box for a chance to drive off in the world's most desired electric SUV. With an all-new interior, updated exterior styling, and a 300-plus mile single change range. We are quite excited about this experience because it provides a chance to explore the great outdoors in luxury and style and protect it at the same time. Another beautiful thing about this experience is the nonprofit organization. Reverb partners with artists, festivals, and venues to reduce their environmental footprints while empowering millions of fans to take action on the most pressing environmental issues. They worked with artists like Billie Eilish, Maroon 5, Harry Styles, and Pink, eliminated over 280,000 tons of CO2 emissions, and greened thousands of tours and concerts. So, for your chance to win the eco-friendly Tesla Model X Plaid, go to www.amaze.com/savvy and enter now. All donations support the amazing work of Reverb.
The Fed really has to get real estate to go down before inflation stops. So I got to get out of real estate. Crypto and gold and soft commodities, kind of the only things left, or art, maybe, intellectual property. There's a few things that are kind of different from rates, but not many. And so I think, crypto being one of the biggest and most interesting, will start to get the marginal dollar being allocated to crypto.
It's also an interesting point in time. I'm actually expecting a faster slowdown, and actually I think rates back off. But either way, we're kind of record oversold versus every metric for the space. Let's say it goes down another 30%, 40%, 50%. Let's say use 50% for easy maths, because that's the kind of moves crypto does when it feels like it. The upside is 10x from here, at least. So the risk reward at these levels becomes ludicrous, which people don't understand. These network adoption models, whenever you're kind of dramatically oversold, your risk reward explodes in ways that doesn't exist elsewhere. How are you thinking through this?
Well, you mentioned drinking some wine, but I think we're drinking the same Kool-Aid, because I totally agree that crypto's gone through these wild cycles, as you know. And sometimes it is kind of bubbly and overbought, and sometimes it's really inexpensive. And I literally think right now is the most compelling, even value-oriented time I've seen in 10 years of doing this, right? There were some times it was the same price as it is today, but we were 4 or 5 years back in history with, hundreds of millions less using it and, all that stuff. And so I think given that we've had a 75% fall in Bitcoin, 80, 90, and some of the other things, we're really at incredibly cheap levels. And a couple of metrics on that. We've never had a period that Bitcoin's at the same price it was 4.5 years ago before. It is. So it's right where it was in 2017. And I got to tell you, nothing is built out in 2017 as it is today, right? We have so much more stuff happening, so many more people using it, all that. So just on a fundamental basis, it's better than it used to be, back in that era. And just a great metric for how cheap things have become. All of DeFi, $8 billion. That's crazy, right? We can complain about, about DeFi is only people speculating. To be only $8 billion when the legacy financial industry is $2 trillion is just cheap. And like you said, it's very asymmetric, right? Say you buy all of DeFi and you pay $8 billion, right? You can only be down $8 billion. You might be up, 10, 20x on that. And I really do think we're at that level. We're so inexpensive on most tokens that the risk reward is fantastic. Obviously, it could keep going down. It could go down for another year or whatever. But it just doesn't feel like when you do an expected value type calculation, you can't, it just seems like you're going to come up with a great time to be invested.
One of the notable things Powell and Morehead point out in the interview is the risk and reward ratio of the crypto market. It might be down over 70% right now, but the reward will be far greater when the bull market rolls around. We've seen such exponential rises even after 80, 90% drawdowns in prior bear markets. Nothing indicates that we are not going to have a similar scenario during the next bull market. When the cycle changes, this 70% decline will not matter to investors. Let's get back to Raoul Pal and Dan Morehead's interview as they discuss the window of opportunity that is open for investors.
Well, what's interesting is I see a lot of people who've been in the space maybe for the last cycle, the cycle before, and they're kind of well known now. And they're so scarred by the last cycle that they can't conceive that it could be different this time around. I look at this and, we've got the ETH merge, which we'll talk about. We've got significant potential catalysts around. And all I know is everybody's underweight again. Every hedge fund I speak to, every family office, every institution, they're underweight. And I'm like, and you and I know this, the path of most pain is usually where markets go. And I'm thinking, well, probabilistically speaking, it's up, not down, because everybody's expecting a new low. I can buy Bitcoin at 15,000. That's the kind of narrative. How do you think about the kind of upside, downside, risk reward here.
Oh, I agree. The best time to buy is when there's a whole cottage industry of people predicting how the next 50% downdraft is going to happen. I see that all the time in research and everywhere, talking about the next shoe to drop or the next whatever, or the next Celsius or the next, no, that would have been really useful at 65,000, right? If somebody had said, hey, the market's probably going to go down 75% in the next 4 months, that would have been great research. Nobody was saying that. Everybody's massively bullish at 65,000. And now that we're, at 20,000, people are all like, oh, it's, we got another 50% to go, or it's, Fibonacci hits 11,000 or whatever. That's the best time to buy, when everyone's now an expert on bear markets. There was even a conference session recently about like the best short strategies. I'm like, no, it's terrible. Who wants to get short in this 75% hole, right? And again, no one was saying that at the highs. And to my mind, that, that's a great sign that it's time. Also, time itself heals a lot of wounds, right? Like whatever leverage people had, whatever distress they were in, it's been 8 months since we were at the highs, right? That just stuff gets worked out over that period of time. We're already well past the average length of a bear market, or had the same depth, like it just kind of, you and I know, you can take pain for so long and then you have to, give in. And just there's a period of time that markets just can't go down that much longer, because people, just everyone finally has given in. And I think we're at that point, that we've been down for 8 months. It's very easy for me to see the low having already been put in June. And, we're kind of back to the next cycle.
What is your level of bear market pain, and how do you plan to plow through further possible price declines? Let us know what you think in the comments section below. Also, ensure you drop your thoughts and observations about Raoul Pal's interview in the comments section below. If you like this video, then give it a thumbs up, subscribe, and turn on post notifications for more. Thanks for watching.